Welcome to Market Makers, everyone. Guys, Lee is on holiday, so there's no intro. He's gone for 3 weeks in Thailand. I just covered that in the crypto video, which went out just before this, but we have a lot of important charts to get to in this video because this is the most important time in the market. Speaking of cycles, over the last 100 years, I've showed you the charts the last couple of videos, shared them on my X at Market Canary. Over the last 100 years, November till the spring equinox is the most bullish time in the marketplace, and I believe the S&P will be pushing up to 7,500. We've had these targets since Q4 2024, 7,000 to 7,500, and we got so close to 7,000. Yet look how bullish the market is on my screen, and everybody is giving you doom. The market's going to go down 80%. Bitcoin's losing a zero. We're going to chop sideways for a decade, 2 decades. It's all falling apart. Oh my God. What they're going to miss out, just like they did in April, they missed the strongest turnaround rally in stock market history. They're going to miss this major rally that forms here in the market as we get into November, into December, and push up to these higher level targets. Guys, if you want to trade these markets, if you live outside the US, check out SimpleFX. They are a fantastic exchange. You can trade all the stocks, cryptos, commodities, Forex, and you can be a Market Makers VIP and get up to a $5,000 first-time deposit bonus. That link is in the video description. If you want to join our Discord or get our members-only videos, check out the YouTube join button. You can join right there through YouTube. You can hop over to the Discord or just get our videos that we publish right there on YouTube. It's a fantastic way to support me, and click the like button and subscribe button. Let's talk about the ES. So while everybody's giving you doom and gloom, right now we're 1% off of the all-time high here on ES. Now, we have a gap that formed. A lot of you guys that trade, ETFs, you're always talking about gaps and gap theory. Gaps don't form that often on futures because it trades 23 hours a day, but we do have a gap here on the upside, okay? Now, a couple of things here. We have a Wyckoff structure. We have a sideways market structure. All this is in my education, but we have a sideways market structure. Typically, you see a wave up, the breakout from the Wyckoff structure. A back test of that structure could dip down a little bit, the green box, and then you break out to the upside if the bullish trend is to continue. Taking out that fractal, you're going to new highs, okay? It's typically how it plays out. What you have right now is you have not filled that gap on ES. We're going to look at the spider too, don't worry. You have not filled that gap. You have what's called in Japanese candlestick trading a Tsuki gap defense, meaning you have red candles come into the gap and they're getting pushed back up. The markets are very, very bullish. Momentum is a cockroach that is very hard to kill. Tom Lee was on TV this morning saying he upped his target from 7,000 to December towards 7,500. I've had that target all year long, guys. You're going to be pushing towards 7,500. Most people are going to miss this rally. They're going to miss it in the cryptos. They're going to miss it in the equity market, okay? So let's look at this on the fear and greed before we delve a little bit deeper. This morning, you got up to 51 in neutral. I covered this in the crypto video, so I won't spend much time on it. But just keep in mind, early October, when we got down to extreme fear, that was a 3% pullback in the S&P. Extreme fear. People were calling the tops. People were calling it tops in mid-October. People were calling it tops with Powell when we were in fear. And now here we are at 46. We hit 51. I believe this cycle will finish out in greed or extreme greed. 2026 could look like 2022. We'll get some type of correction. Could be a large correction. Who cares? We need to get the tops first, okay? Then we're going to be looking at that. Then we'll be looking at shorts. This is all about the expansion in the market, I believe, for this cycle. So we look at the VIX. VIX, it's back down again, 17.14 here on the VIX. Nothing to write home about. It's because you have this strong bullish market. We could continue to chop. If we do get our pullback, guys, watch the support at 68.06 on ES, down to 67.22. And again, that would simply be a pullback. That would be 3%. 3.25% pullback before you base and go back up, right? If this got more bearish, watch for this move before you break back out to the upside. But right now, you have gap defense going on. This is hyper bullish if this holds up, because ultimately this is going to break out. One thing I should point out, I was on X reading some of the senators' comments. I think it was Ted Cruz that was talking about it. He said he thinks the Democrats are going to vote to reopen the government a day or two after Election Tuesday, so Wednesday or Thursday, because they believe that helps them in the elections. They make people have more pain, more suffering. They're hoping that brings them over to their side. The Republicans only have 53 senators. You need 60 senators to reopen the government, so you have to have some crossover from the Democrats. The point of bringing that up is not to be political. The point of bringing that up is the Treasury has been collecting inflows with very little outflows because the government has been shut down for 33 or 34 days. Liquidity will be re-entering the marketplace. The Fed's about to start QE again as well. So understand that this is all cyclically bullish for the market in the most bullish time of the year. You want to hold 67.22. Guys, the trend has not changed at all unless you take out 65.40. You're at 6,900 almost, but you have to take out 65.40. You'll come back and back test it to some capacity and fall apart. And that would be where I would be shorting. But what's going to happen is something like this as you push up towards 7,500. Let's just look at this on the indicators real quick. Again, the volume confirms the trend. The DVD confirms the trend with higher lows, higher highs here in trend. This is very, very bullish. Look at the Canary RSI. Very, very bullish. Momentum still bullish. Everything is still bullish that matters on the daily time frame in the largest market in the world. What about the NASDAQ? Surely that's going to collapse 90%. Well, right now, we look at the NASDAQ. This is futures. Today you were 0.5% down at the high. Right now, as I'm talking, we're about 0.75% down, a little bit more from the all-time high. The NASDAQ typically moves 300 plus points a day. And look what you're doing. Sideways at support. Support of what? The 1618, 25,941. Again, you have Tsuki gap defense going on here. There's your futures gap, 25,570. Hyper bullish that it's holding up at that level. If it does retrace, if it was to break down, right? Same thing as on the S&P, guys. Shallow retracement, breaking back to the upside. Typical Wyckoff situation, you break out to the upside, you would retest support, maybe dip below, and then you break back to the upside if the bullish trend continues, taking out that fractal high, which is your all-time high of 26,399, going up to target. Target is 28,179. If it gets super bullish, people lose their minds. I think you could get to 30K because this is the overbought 8 we're talking about. So this is what I'm looking at. You want to hold 25.4 and you definitely want to hold 24,965. That overall retracement, if you even get this retracement, would be about 4 or 5%, right? Coming back down to key support. Trend has not changed unless you get below 24,158. You have to get below that to have a moderation in the trend. And just like on the S&P, if you did break down, you're going to bounce at some level, retest prior support, which will now be resistance, and that would be my short. Over here, I'm looking at upside, right? So let's look at this on the indicators. Canary is bullish. Volume trend is bullish. Momentum is bullish. YouTube and X are bearish. Choose your side, okay? Because don't miss out on something that could be momentous. We have volatility until we see the market settle and break out. Let's go over some of the overbought 8. Apple hit a new all-time high just on, what is that, Friday. New all-time high. Look at the structure of Apple. If you're bearish, you're going to say, well, this could just be a double top right here and come back down. Could be, or it could just come back and test support, right? Test support. Could go sideways. It can chop around. Point being, you made a new all-time high. This is a bullish trend. April lows, higher lows, all in trend. Higher highs, all in trend, new all-time high. Guys, this market is going to run. If you look at Microsoft came up, came down, made a nice W pattern here, right? Always talk about my W fractals. Made a nice W pattern. It's back at support at 515. Microsoft trend does not change unless you get below 492, okay? So again, you're going to have volatility. People are rotating their money back and forth. This is why you haven't seen the VIX spike. Puts are peeling off the VIX. You have people going into calls. So just watch the overbought 8. I'm just using them as a guide because ultimately Microsoft could be making a sprint up to 594, which is at 517 right now. If we look at NVIDIA, if it finishes this way, it's a new all-time high on the daily time frame, okay? You're at 211. First resistance here is 215 and then 227, making a new all-time high. Again, bullish, guys, very bullish. Nvidia would have to lose 164. It'd have to lose 164 to really break down and start changing that overall uptrend since April, okay? So very bullish. If we look at Google, Google broke out, new all-time high on Thursday, October, right? So new all-time high. It's trading right around the all-time highs. It has support. Look at the gaps. You have multiple gaps. These lower gaps, these will not be filled. I do not believe they're going to just come. Google could come back down, retest around 270, 274, but you'd have to have the market severely correct, right? Or have some type of idiosyncratic story to really bring this thing down. It broke out of the channel. Guys, the markets are going to run. I keep repeating that. Amazon, same thing. New all-time high, okay? New all-time high, multiple gaps. Stop looking at it like these gaps have to be filled because this is the most bullish time of the year. Look at your support structures. That's more important. If we look at Tesla, Tesla breaking out of its trading range, got above 462. It's at 468. It went all the way up to 474 today. It's going to try to hold 462 as support. The next target will be 521 on Tesla. Moving along, looking at Meta. Meta, idiosyncratic story. They did not like the CapEx spend. They did not like the debt issuance. Meta broke down right to support, 645. That's kind of where it's hovering. I think this thing's going to get bought because people are going to turn bullish on it. Wow, it's a great discount. All the other overbought 8 are flying. I'm going to buy some Meta. So watch for Meta. Watch 645. Strong support level potentially here. You got this cluster of candles right here. So watch and see if Meta bases here. And by the way, if Meta starts rallying as well, it's even more bullish for the market. Look at Broadcom. Just recently, new all-time highs. It's holding at the highs. 365, Broadcom at 364. Wants to try to hold up in this range between 350, 364, and see if you get some chop. Overall, I believe Broadcom's going to be moving up as well. You could see 435 hit. Why do I say that? Because of how the fibs are tracking. 200% gave you a nice retracement down to 322. Broke above the 200%. We're going to try to hold this level. Go sideways, spiral a little bit, break out. 435 is the next level. You look at the Russell. People talk about the Russell breaking down. Again, you got to zoom out and look at the overall trend. 8-hour chart here. That's a breakdown. I mean, just look at the chart, guys, since the April lows. That's bearish. That's a bearish chart. So you have April lows, right? You can just go along. Highs, lows, new highs, higher lows, more highs, higher lows. The Russell has to get below 2381 to change the market structure. It's at 2473. Right? So the Russell can break above 2566. You're going to new all-time highs. Again, bullish structure. Most of these markets are accumulating, chopping sideways. There's further room to run. Let's go to the Spider. Spider, same thing. There's that market top, 700, and then max bull, 750 for the Spider. Look at your gap defense, your Tsuki gap defense, the Warrior's belt, right? You have two gaps here. Did either one of these get filled? Let's just look at this one. Nope, gap's still open. So you have gap defense. Again, hyper bullish. You had candles come back down into the gap and could not close the gap. They could still close the gap because this would be totally normal to come back into this trading range. But you're looking at support at 674 down to 665. Right here in this range. I believe that's strong support. I believe that's the only retracement you would get in this type of environment. And again, that's a 3.5% retracement at the max. Could be less than that, 2.5%, 3% if it comes down there. But right now you have gap defense going on. You have accumulation going on, which is what? Sideways market structure. 700's your next target. 750 is the target after that. You're going to see that progress into November and December. The trend has not changed unless you take out 650, and you're at 684 right now as I'm recording this. If we look at the Qs, same situation. You have this range here of support. Let's move that support line down. 602 to 613. In normal Wyckoff situation, you would have the breakout, would come back and retest support either at the top or dip in a little bit. And if the trend's to continue, It'll take out that high fractal there and move on to the upside. My next fib level I have here, if we can hold this, and by the way, you have the same thing, the same gap defense going on down here. You have a gap down at 618. You have another gap down here at 611. And look where you're elevated at 632. You're holding the 1618 as support. You see the candles literally bouncing off the 1618? That's at 626. You have 679 up above you as that next level target for the Qs. And don't expect them just to ramp up there, right? You could be going sideways for a while before you break out. You could get that sell-off into that support structure between 602 and 613. And then that's your trigger point breaking out above the all-time high of 637. Different ways it can play out. Both ways are bullish. Key takeaway, right? Let's go to the last chart here on Hood. A lot of people like Hood. 2618 was 152. Hit this thing beautiful on our pattern, sold off, pushing back up to that. Looking at the higher level targets, if you can flip 152 when we get the breakout, 180 is the next target above that, possibly 194 as well. Overall, the structure is not bearish on Hood. Hood would have to start breaking down below 120. You're at 146 right now to start changing this upward momentum in Hood, okay? Watch all these markets, guys. It's very important. One thing I want to show you here, last thing, Shiller PE ratio. My thesis has been we will take out the dot-com high of 44. We are just about at 41. We will take out 44 during this rally in November, December. Enjoy. I'll see you guys on the next video. Follow me on X at Market Canary. Hope to see you guys in the room.